And we are live. What's up, everybody? Welcome to In the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made it my mission to help you guys own it. It is Sunday, Stock Watch Sunday. It's Mother's Day as well. So hopefully y'all showed your mother some love, a little extra love on Mother's Day. It is February. It is May the 8th. 2022 futures right now not looking great, guys. We have everything's down. Everything's down right now. Not a lot, but enough to still cause some pain. So we got the S&P futures that are down 26.5 points, which are good for a loss of 64, like a half a percent, 0.64%. 178 points on the Dow, down a half percent. NASDAQ down 0.67%, which is good for 84 points. We got WTI crude also down by like 50 cents. No big deal on there. So it's at $109.27 per barrel. Those are your futures right now. And a couple of things that we're going to be covering tonight. We have, have we reached the bottom? Or is there a case that we can make to where that would make the bulls happy? AKA make me happy. I found some things that I think that are worth looking at and maybe can provide some insurance or assurance for people who are long in this market. Also, top stocks to watch for this week. We're still in the thick of earnings season, guys. Yes, even though the sky is falling, we got a lot to cover as far as that's concerned. Still some really big names that are going to be reporting this week. I'm going to cover all of those as well. And then put it in the chat. Let me know what you guys are thinking about this week. What's your favorite stock that you're watching this week, or you're not watching anything? I want to hear from you. What do you think about the market overall going into this week? How you feeling? Let me know. Before we get into anything, though, as you guys know, let's hit up the starting five. There was quite a conversation going at the beginning here, but we have Philip Stroh, we got Alan, Ankit Guar, and then Lost One and Prince Buttar. You guys are the starting five. Thanks for showing up early here. If you guys missed getting called out on the starting five, then it's probably because you didn't hit that notification bell or you're not even subscribed. So why don't you go ahead and do yourself a favor, hit that subscribe button, hit that notification bell to get notified when I go live. You can hit up the chat first thing as soon as you see it, and you might just get shouted out on that starting five. Also, hit that join button next to subscribe, or there's a link in the chat as well. You guys want to become part of the Chaos Crew? Each and every morning I put out a list of stocks, 5 stocks that I put out before the market opens that I think are worth watching. I give a nice fundamental and technical breakdown on all of those, and you can only get that if you're a part of the Chaos Crew. So make sure you're hitting that join button next to subscribe, or the link is in the description above. Would love to have you guys as a part of the crew. All right, as I had mentioned before, we got futures right now that are red, and everybody's, I'm sure, probably asking the question, have we hit the bottom? We're going to get into whether or not I think we've hit the bottom in just a few minutes, but hey, I appreciate you. I was just checking in with some of the viewers here. What's up? Shane Haley says I don't always comment, but I'm always watching. What's up, bro? I know you are. I appreciate you. Melanie Hutchinson says, I know one of the starting five. I know I was one of the starting five, but I will be mentioned anyways. Yeah, you will be. I just mentioned you, so there you go. Congrats. I see you, Bob. What's up, Bob? Good to see you, man. And some of you other folks as well. But like I said, give me some stocks that you're looking forward to watching this week. It could be earnings related. It could be just in general, something that's been beaten down so much that you think is worth scooping up. And I will be, maybe I'll cover it towards the end of the show. If you guys recall, last week I started the over-under segment. I'm going to reserve that for Monday through Thursday. When the market's open, we're going to do those over-under segments Monday through Thursday. We're not going to put it here in Stockwatch Sunday. I'm going to try to think about some ideas that I can reserve for Stockwatch Sunday specific show. But we're going to keep the over-under for Monday through Thursday. I really think that that's starting to pick up. So we're going to continue to stick with that. A lot of you guys seem to like it. It'll be back tomorrow at 3:45 p.m. Eastern time when I go ahead and react to some really good earnings. That's going to be Upstart, AMC, Suncor, Plug Power, Clover. I know you guys love some Clover. Tattooed Turd, aka Tattooed Chef, Blink, and Lemonade. So actually some pretty good earnings tomorrow. So I'll be reacting to those. You'll get my over-under segment at the end of that show tomorrow. So hopefully I'll see you guys there tomorrow. All right, so the S&P 500, the markets in general, are in absolute turmoil. If the world ended tomorrow, this stretch between January through April, the worst the S&P 500 has seen since its existence, which is pretty crazy. Definitely since 1945. So what are we looking at here? I mean, there's a lot of fear revolving around inflation and a potential recession. We had production numbers that came in lower than expectations, while wage increases were higher than expected. And that could potentially be a recipe for stagflation. But there's other ingredients that go into a stagflationary environment. And one of those is unemployment has to be high. And unemployment is nearly, I think we're 0.1% away from 50-year lows. We were at 50-year lows just before the pandemic in February of 2020. Obviously, we know what happened there. And now we're back to that. We're back to a point to where we were basically before the pandemic started back in 2019. So we're almost again at a 50-week low or 50-year low on unemployment. And to me, that I think is a positive sign. I think the economy is still doing extremely well. Usually in a stagflationary environment or even in a recession, we don't have this much money sitting on the sidelines, not just from the consumer, but also from business. There's so much CapEx out there that's available to spend. You guys heard me talking about Alphabet, $70 billion buyback. Apple, a $90 billion buyback. These kind of things wouldn't happen if we were so worried about recession and that sort of thing. At least for now. Could we potentially see one next year? I think if we see one, it would be quite mild. Not anything like we saw in 2008, the great financial crisis. I don't think we're in danger of seeing that at all. There's a couple of things, right? There's a couple of things that are contrarian here, and that one of them is that just fear is so high. Everywhere you look, everybody's talking about the sky falling, and usually when you see this many people, this crowd, the headlines that you see about the markets crashing or that we're going to see a recession usually ends up meaning that we're not going to get one. And I'm just saying, when you look at this from a perspective of recessions or market crashes and recessions happen usually when nobody's actually expecting it, or when it's something happens that's unforeseen, right? The mortgage crisis, nobody really saw that coming. Some of the other times that we saw crashes in the market, it was something out of left field. And usually when everybody's crying recession or everybody's crying a crash, it doesn't actually end up happening. Like, there hasn't been a time where you have so many people being so bearish and it actually comes to fruition. And again, we could potentially see a recession, but it would be very mild. We just saw GDP slow by 1.4% last quarter. If that happens the second quarter in a row, by definition, that would be a recession. But still, it's really weird and really strange to say that we're in a recession when we have 3.5% unemployment, when there's so much cash on the sidelines, not just from the consumer, but also from the business side of things. This, to me, just doesn't really reek of recession. Not in the context that we've seen in the past, at least. So there's a couple of other things that I thought was very interesting, and that was from Fundstrat. So if you guys don't get if you guys don't have a subscription to Fundstrat, first of all, Tom Lee is phenomenal. His team is also really good. This is one thing that I thought was interesting. So Tom Lee talked about last week about the FOMC meetings of the last 5 of the last 6 times. We actually saw a rally post meeting. We just had our FOMC meeting last Wednesday. Obviously, the market responded. Well, they responded positively, and then we also saw the crazy give back and then some on Thursday after Wednesday's meeting. And so the interesting part here is that 5 of the last 6 times, the only time that it actually sank after the meeting was September of last year. This isn't to say that we'll see a rally, but I mean, odds are pretty good, right? Especially considering how much things have corrected up to this point, how many things have been priced in, which brings me to my next point and brings me to the next slide from them. So when we look at Fundstrat and what kind of research they've done, the S&P right now is trading at 18 times next year's earnings. So the forward PE is at 18 times. the last time that we saw high interest rates from 1990 to 2010 over that 20-year span, the 20-year interest rate averaged 5.3%. The S&P averaged around 17.7 forward PE. 10-year was at 2.9, that was also, the 10-year was also around 5.3% from 1990 to 2010, so over that 20-year span. And the S&P was at 18 times versus the S&P right now is at 18 times versus 17.7 from that 1990 to 2010 period. That was with a 10-year yield at 5.3%. Right now, we're just over 3%. So what does that tell you? To me, that tells me that we could see a to me, this looks like a lot of this is baked in. You look at the S&P right now sitting at 18 times next year's earnings, with the 10-year sitting at 3%. During that 20-year span between 1990 and 2010, we saw the same type of PE of around 17.7% in the S&P 500, and interest rates are at 5.3%. So to me, I think, and granted, from 1990 to 2010, the economy wasn't nearly as strong as what it is now by unemployment numbers, by wages, all of that. So obviously inflation wasn't a thing back then. We hadn't also gone through a pandemic during that time. So there's definitely some variables that you could throw in here that pokes holes in this theory. But the fact of the matter is that I've been talking about this for quite some time, that I felt as if equities had a lot of this stuff baked in, or there was a strong overreaction. And if you're just looking off of the 10-year note, based off of what we're seeing and what history has shown, then with the S&P 500 trading at 18 times next year's earnings, to me, that means that the S&P is actually pricing this in by a lot. Okay. And so we take a look at the SPY chart right now as of the close on Friday, and we've spiked below this previous intraday low that we saw back in February of this past year. And these are both intraday lows. This 405.02, and what is this? This 406 or 405 that we saw on Friday. I think that those spikes kind of tell us a story. We didn't see a close below those. Now, again, we don't know what's going to happen tomorrow or this week. Maybe it does close, but we haven't seen it yet. And so I think that that's important to show how, this has been holding this area. Now, if things continue to get worse, if it closes below that area, that 405, 400 area, then I think that it does end up getting worse. We could see the S&P or the SPY fall down to 393, could even hit as low as 389. So that's certainly something to consider, especially if the fear continues to continues to accelerate. We continue to see fear in the markets. One thing that's going to potentially turn this around is CPI numbers that come out on Wednesday. Now, on Wednesday, the expected CPI is at 8.2%. But here's one thing that you should consider as well. The majority of the CPI number has been due to used car sales. We saw a huge chunk of used car sales take up the CPI, and we are seeing used car sales now plummet by 20% or more. So I think, I have a hunch that we could see a significant drop off in CPI on Wednesday, and that should, keyword being should, that should rally markets. If CPI comes down, if the expectation is 8.2% and we see a number print of around 1% below that, maybe around 7.1, 7.0, I think that we see the markets react very strongly to that. Because what does that mean? That means that the Fed will still react and will still raise interest rates. There's a lot of people out there that think that Jerome Powell is just going to continue to raise rates until something breaks. I'm not quite sure I'm in that camp, but I think that they could have a softer approach if they start to see CPI or inflation rates come down as much as 1% or 2% per month. That means that we could see something close to that 2% inflation rate that the Fed is actually looking to get to. So, not saying that any of this is set in stone, but I thought that it was worth at least talking about. A couple other things to note here. Charlie Baleo, I put this in one of our newsletters, or the watch list in the morning. I always kind of give like a small macro approach before I get into the list for the day. But you know, a 20% decline, from the S&P highs would bring us back to 2021 levels. And Charlie was sharing this out, so go follow him on Twitter. 30% decline would bring you back to 2020 levels. A 40 to 60% decline would bring you back to 2019 levels. I think stocks and equities in general are more valuable than what we saw in 2019. And a 70% decline would bring you back to 2017 levels. I don't think there's any way. I'm not saying it's impossible. I just don't see a path to 2017 levels. And I certainly don't see necessarily a path to 2019. Could we see something back to our 2020 levels? Maybe that would mean a 30% decline in the NASDAQ. I don't know. I just don't see how we get that far down. There is potentially a bottom that we could be seeing rather soon. And just to make it fun, Charlie also shared an interesting chart here as well. And that was CNBC's Markets in Turmoil. So this is a very interesting chart. This is a 100%er. Okay. This is a 100%er. Let's take a look at this chart real quick. CNBC Markets in Turmoil. If you guys don't know the segment, every time the markets get crazy, they'll have like this 1 hour special. It's usually aired in prime time, and they call it Markets in Turmoil. They'll have all their big heads on, and they'll be talking about the market and whatever it is that they're showing and what have you. Let's take a look at what actually happens after the Markets in Turmoil special rolls. You can see since 2010. Now, one thing I guess you should note is that since 2010, we've been in a bull market. So take that into consideration. But 1 year forward return back in 2010 was up 21%. And the total since that return was up 367. And we just go all the way back to the most recent, which was March of 2020, March 4th, 2020. We saw 1 year return of 25%. And since then, 37. So listen, I'm not saying that this is something fun, but of course it is kind of hilarious, right? I mean, we even go back to, a couple of times, a couple of airings back in 2020. The latest one, June 4th of 2020, 38% return in 1 year with a total return of 37. So I just thought it was funny. It's an interesting chart for sure. And I thought it was worth just talking about because it is pretty funny. All right. So I see a lot of you guys talking about futures right now. Let's take another look at those. Futures, are selling off. Here's the thing. I know it's easy to get excited about futures being down. Listen, how many times have we seen futures down or up on a Sunday? You come in Monday morning, the markets open up and everything rips or drops off, depending on where we're at. I don't think that anybody should take futures too seriously because there's so little volume going into the futures, and there's a lot of manipulation that can go on. So take that for what you will. Futures aren't a big deal. It all matters what happens when the market opens. All right, getting into the next segment. Before I do, guys, make sure you're hitting that like button. I certainly would appreciate that. About 85 of you guys in here. This week is I'm super pumped. So we have a lot of really good earnings that we're going to be covering, and I'm going to be putting a lot of these on the watch list that I put out in the morning before the market opens. If you guys aren't a part of the Chaos Crew, I see a couple of people. I see you, Alan, and I see a lot of other folks that are part of the Chaos Crew as well. If you wouldn't mind hitting that join button next to subscribe or going to ownthechaos.com. There is a link in the chat as well if you guys want to check that out. But guys, it's a deal. $4.99 a month. You get the watch list from me, from your boy, every morning before the market opens. And I get a nice fundamental and technical breakdown on the stocks that I think are worth watching before the market opens. It's, again, $4.99 a month. Not a whole lot of risk to you, but it helps me out, helps support the channel and everything you see behind you. So I certainly would appreciate it if you guys join the Chaos Crew today. Again, hit that join button next to subscribe, or you can go to onthechaos.com. There's links everywhere. They're in the description. They're in the chat. You can't miss them. Please go sign up for the Chaos Crew. Love to have you guys there. All right. Checking in here real quick before I get into the stocks that I think are worth watching. Vince T says Tuesday market bottoms for this month and then tops again from a dead cat bounce end of month or near end. That is very specific, my friend. I'm sure we'll keep an eye on that. Ryan Rose says, good luck, guys. Been buying past week. Profitable, high balance sheet, free cash flow software. Yeah, I mean, there's a lot of deflationary things going on. And very interestingly, a lot of you guys have already voted in the poll that I put on in the stream here as well. 56 of you guys have voted. It's a 50-50 split between bullish and bearish for the week. So very interesting, guys. Very, very interesting. I appreciate this, Melanie. Thank you for hitting the like button. All right. So there is so much to talk about this week that's happening on. Obviously, I talked about CPI numbers, but again, as I'd mentioned at the top of the show, earnings are still just rolling in. We saw, obviously, the big dogs have already kind of reported. Your Amazons, your Apples, the FANG conglomerate has reported, but there's still a lot of important stocks. They're going to be reporting earnings this week, and I think that they're worth mentioning, especially and I think that perhaps they could show us exactly what's going on in the here and now and what they're expecting. We've actually had some really good earnings that haven't really gotten a lot of good headlines. You know, Airbnb has been reacting to the rest of the market, but those earnings were incredible and the outlook was really good. The airlines and the travel part of the market has just been on absolute fire. And if consumers were worried about a recession, or if the CEOs were worried about a recession, we wouldn't hear stuff like that. And supply chains are actually easing. Just take, for example, Sherwin-Williams. When they just reported 2 weeks ago, they talked about how supply chain has really been easing up on their side of things. Obviously, Sherwin-Williams is just one small part of the supply chain, but I think it's encouraging to see that we're seeing some things ease up, which again is another deflationary factor. This is going to be really important to hear from some of these companies as well. AMC, I know we joke about it, but it seems as if we saw some ridiculous numbers from the airing of from the release of Doctor Strange. So if you guys didn't catch that, Doctor Strange 2 was released over the weekend. Some really impressive numbers on that, and was the 5th highest grossing movie of all time. Obviously, that could potentially create some stir on AMC. Again, this isn't something that I'm saying, hey, let's go buy some AMC and it's going to be a good long-term hold. I'm not in that camp. Sorry if you are. I'm just not. But we can take a look at the stock and just see how much it's gotten beaten down. And their expected earnings per share of tomorrow, which I'll be reacting to, at a loss of 63 cents, $743 million in revenue. I think that they could actually beat this number, and I think it probably comes in pretty high. I think the bar's been set pretty low for a loss of 63 cents and only $743 million being brought in. So by no means am I saying that AMC is an absolute winner, but I think, like I said, the bar has been set low, and if there's people worried about a recession, then we could probably see this reflected in something like an AMC. So interesting, right? I mean, I'm not saying that this is something that is, like I said, something that I would own long term. That they have a ridiculous amount of debt that I'm not quite sure how they get over. But AMC is certainly one to watch for next week, just for the purpose of trying to understand where the macro part of the economy is looking at. Then we also have Plug Power. This is an interesting one as well. You know, it's been really volatile, really in this, the energy and renewable energy in general has been really volatile. The solar stocks and what have you have been all over the place. But this is also at an interesting level. This is at now to support at around 1940. It closed at 1941, had a little bit of a move up after hours, but no big deal there. And this is one that I think is also going to be interesting to watch, because if energy prices are going through the roof, and I'm talking about crude oil still sitting well above $100 a barrel, and non-renewable energy is costing an arm and a leg, could that, and some people are speculating, could that translate into more renewable energy? And that would favor something like a Plug Power. So their estimated earnings per share are at a loss of 16 cents. 144.49 million. Again, I think it's a pretty low bar, and I think that there's potentially some room for this to move up with it sitting here. The risk reward to me looks pretty darn good. Not saying that you should buy it before these earnings, but I think that there's plenty of upside to be had here. Of course, I mean, you're looking at, even just to get to the 50-day moving average, that's a 20% move, and to get to the 200-day moving average, it's nearly a 35% move. So I think that this is actually really good risk reward. You got RSI sitting pretty low at 35. So, I'm not saying that. I think the real course of action here, if Plug Power is something that interests you, is probably to look at this and think to yourself, risk reward isn't bad. Maybe I keep a tight stop on this, but maybe wait till after earnings to see if they're actually that good. I'm not expecting them to just return to their highs at 46.50 off of some decent earnings. I think that this is something that I think just worth watching for and maybe making a play after those earnings come out. A couple other things that I think are worth taking a look at. We got Disney, guys. And Disney has been in the absolute doghouse for a lot of reasons, right? Politically, they just haven't been painted in the great light. Then you have Netflix and a lot of the other streaming services coming out and talking about how they're seeing a slowdown. I don't think that Disney sees a slowdown at all on Disney Plus, for one. But when are we going to stop looking at Disney as just Disney Plus, as just a streaming service? I don't know why investors are looking at this right now and treating it as if it's Netflix. It's not. The parks are opening up, and I know a lot of you guys could attest to this, but good luck trying to get into a Disney park over the next 3 to 6 months. Like, good luck, because they're absolutely packed. And I don't think that there's any reason to look at this and think to myself, man, this really deserves to be down here below pandemic levels. I don't think so. 2019, just before the market crashed, the high that we saw in 2019 was at $154 per share. When we look at the low here was at $79. The pandemic low was at $79. And we are at a level now on Disney that we haven't seen since May of 2020. You cannot tell me that with the growth that they've had since May of 2020 on their Disney Plus platform, plus the fact that their number one revenue driver, which is the parks, is back in full effect, that Disney doesn't deserve to go higher from here. So I think that we'll hear some really good numbers on their earnings. And to me, this is definitely one that I think the risk reward is probably, I don't say this very often, is probably worth it pre-earnings. If you were looking to take a chance on Disney before earnings, you have my blessing as far as I'm concerned. Now, granted, I'm not a financial advisor, and you shouldn't listen to a damn word that I say as far as that's concerned on your buys or sells. However, you just can't look at this chart and tell me that it's risky here. You just can't. Estimated earnings per share $1.06, $18.75 billion dollars in revenue. And there's a lot of people speculating as to what kind of Disney Plus numbers we're going to see. I think the expectation is anywhere between 2 to 4 million subscribers added to Disney Plus. I think that they come in and meet those numbers, maybe exceed them. But listen, at the end of the day, and again, there's also this argument that they're going to have to spend a lot of money to continue to compete with the other streaming services. But at the end of the day, the Disney Plus platform for Disney is just icing on the cake. Has nothing to do with the core part of their business, which is the parks. This is a reopening play, and I think that this is something that actually crushes it. Absolutely crushes it. It's been in the doghouse long enough, and in my opinion, I think it deserves to get bought up. A couple other ones that I think that are worth looking at. We have a firm as well, and this is one, I told you guys since the start of the year that when we look at a lot of these stocks that are reporting losses, that this is going to be something that really is going to get hurt. A firm obviously got slammed. Sofi, some of the other companies that have reported that are continuing to report losses are getting absolutely hammered because of the rise in interest rates. And I think that that's still going to be a thing for a firm. But one thing that really kind of encourages me, Square came out with earnings that weren't great, but the Cash App side of their business actually was doing great. They actually exceeded expectations there. And I wonder, we see an increase in balances in credit from credit cards such as American Express, such as Visa. And I got to wonder if a firm doesn't do well on these. Now, if you guys recall, last time a firm released earnings and they were early by accident through Twitter, and the stock went all over the place. It ended up shitting the bed ultimately because they came in and actually did very poorly on earnings. And so you obviously have to ask yourself, is this worth getting into? This is one that I would say wait till after earnings to take a look at this one. But they have so many great partnerships with Amazon and Apple and so many other big names. And to me, a firm is certainly one to continue to watch out for. This will go back up, in my opinion. It's just a matter of when, not if. If you have the patience for it, I think go for it. But if you don't, then just stay away and see what their earnings look like and maybe wait till this thing starts to turn around. Lastly, as far as ones that I think that I'm most excited about, this is one that's interesting. Dutch Brothers. This is one that, a lot of people, it started to gain some popularity. This is a company that hasn't really reached the East Coast. So if you're East Coaster or maybe even a Midwester, you probably don't know anything about Dutch Brothers, but think Starbucks, only friendlier and drive-through only. That's essentially what Dutch Brothers does. The company is absolutely amazing based off of my own research. You look at you know, what they do and what they stand for, the way they treat their employees is actually amazing. The employees are giving out free products every single day at their own discretion, which is pretty cool. Just to kind of, again, kind of have that Chick-fil-A vibe, only with coffee, which I think is pretty cool. Average estimated revenue or average earnings per share is estimated around one penny, 145 million dollars in revenue. They're planning to expand quite a bit. I actually like Dutch Brothers here. The stock's come down to a reasonable level. I think it's holding the support rather well. Forward PE on this is quite high, but I think that the growth here is what you really need to look at. Obviously, multiples aren't what people want right now. High multiples aren't what people want right now in a rising rate environment, but the growth here for Dutch Brothers, I think, is substantial. And, if you get in a little bit high, I think that if you have a long-term approach on something like this, it's going to pay off. If you're looking for another support on this, maybe around $37 or $38 per share. That was kind of this intraday low that we saw back in January, late January of this year. But since its IPO, it's been one of the rare outperformers since their IPOs from 2021. So obviously a lot better than Robinhood's. So I think Dutch Brothers is certainly one to watch for as well. That's my list. But guys, there is so much else to watch for this week that I'm going to be reacting to. So make sure that you hit that like button, hit that subscribe button as well, and hit that notification bell to get notified when I go live at 3:45 p.m. Eastern time, Monday through Thursday. We'll also do our over under segment that we'll keep for Monday through Thursday that I'm super pumped for. But there's a lot of other ones, some notable ones here that are jumping out the screen for me is Norwegian Cruise Line. So NCLH, that was a big one during the pandemic. Remember, if you guys recall how much that had come down and then ended up rallying like crazy. But Norwegian has earnings, and I'm sure we'll hear from them as far as demand's concerned and how well that's been going. What are their bookings looking like? We heard from Royal Caribbean, and they actually had some pretty decent numbers as well. Some pandemic winners that have just absolutely eaten it. Workhorse has earnings on Tuesday as well. Tuesday afternoon, we have SoFi, Roblox, Oxy, Petroleum, The Trade Desk, Coinbase, Unity Software, Wynn Resorts, Rocket Mortgage, Matterport, some really big names that are going to be reporting on Tuesday as well. Then Wednesday, you got Yeti, Fiverr, EVgo, Krispy Kreme, Wendy's, that side of things. Those are all kind of like the hospitality, retail, fast food type chains that are going to be reporting that morning. Then you have Disney on Wednesday after the close that I had mentioned. Sandstorm Rivian is also going to be reporting, which is very interesting. I don't know if you guys have caught this, but Ford is actually planning on selling 8 million shares of Rivian, which is a significant size of their portfolio. Rivian has been what can I say about Rivian? I mean, it's just been absolutely atrocious from their IPO. This hit 179 a week after they went public and now has shit the bed all the way down to $28 per share. I mean, just craziness, right? Absolute craziness on Rivian. So what does this mean for the stock? It's going to go lower, no doubt about it. Ford's lockup period is over. The interesting part to me about this is that there is a note of a potential large seller on Rivian as well that hasn't been disclosed. Some high volume, some high selling volume coming from Rivian as well. Ford obviously disclosed how much they're planning to sell. But what if this is Amazon? If you guys recall, Amazon owns like 20% of Rivian's shares, outstanding shares, which, by the way, Amazon ended up having to report a loss for the first time in quite some time for the quarter because of their holdings in Rivian. They had to report their bottom line losses, and Rivian, with them owning so much of it, obviously impacted their balance sheet significantly. I would say that Rivian's going to continue to come down here. And what if Amazon is now ripping the cord or pulling the Band-Aid off, so to speak, on Rivian as well? it's going to be interesting to see how that goes. I'll be curious as to who that big seller is, but nevertheless, I think Rivian's going to sell off. We have their earnings that are later on in the week. I'll be reacting to those, of course, but this is going to be an interesting one to watch too. You look at this and you almost have to think that maybe this is starting to get to a point to where it's not overvalued. It's now $25 billion in market cap, which is still on the high side, but when you compare it to something like a Lucid or some of the other smaller companies, then it's fairly priced compared to what we're looking at there. So very interesting. As far as that's concerned, Ryan Rose says Rivian's unfortunately going to $10. Where is, Nikola came out and reported earnings last week. What's the market cap on them? Because if we have a company that has not sold one vehicle that's trading at the market cap, okay. Totally different. So yeah, market cap on this is at 2.8 billion. Can you believe this? Can you believe that Nikola was trading with the same market cap as Ford 18 months ago, 2 years ago now, I guess. 2 years ago now today, this is where it was trading at. And then everybody found out that the only thing that they know how to do is roll a truck down a hill. But at least Rivian has a product, right, that they've sold and they are continuing to sell. And so I think that we should be giving them a little bit more of a chance here. Where it comes down as far as fair value is concerned, who knows, but I think that there is a bottom to Rivian, and maybe it happens this week. We'll see what they say on their earnings, but they came in and actually talked about their sales, and they seem to be quite good. I actually drove a Rivian a couple weeks ago, and it's pretty dope. I mean, the truck's impressive. I wouldn't own it just because I'm an off-road guy and I like to take my truck off-road. I don't know if Rivian's quite there yet as far as that's concerned, but if you're an everyday driver, you're just looking to haul some shit every now and then, you want to go camping every now and then in it, I think that Rivian, that truck is so nice. It's ridiculous. But anyhow, there's Rivian. They have earnings on Thursday, I believe. No, Wednesday after hours. Then you have Six Flags on Thursday morning. That's probably the big one. US Foods maybe could be one that's worth taking a look at. Then we have Affirm, Aurora Cannabis, kind of lightening up the week on that side of things on Thursday after hours. Really nothing going on Friday either. But let me know what you guys are looking at. Let me just check in with you guys. Looking forward to SoFi. 100%. That's my biggest hold. Yeah, I actually own SoFi as well. I have SoFi calls, and they are really bad. My SoFi position is in the gutter. And I actually was late to the game on SoFi. I actually took calls on SoFi at $10 a share. Obviously, you can see now it's sitting at 644, so not really looking good there at all. But SoFi has earnings on Tuesday after hours, which I'll be reacting to live at 3:45 p.m. Eastern time. I'll be here to react to those SoFi earnings. So if you guys are just watching, first of all, hit that like button, but then hit the subscribe and the notification bell to get notified when I go live. If you guys are interested in me reacting to those SoFi earnings, their estimated earnings per share is at a loss of 14 cents, $286.36 million in revenue. I think that that's a pretty low bar for them, but there's also a risk here. They facilitate a lot of the student loans from the government, and I think that that's going to impact them, and it may impact them. So I'm a little bit worried about SoFi's outlook as far as that's concerned. It got down as low as $6.01. Again, closed on Friday at $6.44. You look at some of the statistics here. The market cap's at $5.9 billion. That is crazy to me, considering that SoFi Stadium costs around that. So the market cap is almost as much as what the stadium costs. Not to say that SoFi actually built a stadium, just that their name's on it, but just to put it in perspective, it's pretty wild stuff, right? I mean, that is pretty crazy. But looking at SoFi, I think that this is undervalued. If we were playing the over-under game, I would say this is undervalued. It's a great fintech company, and yes, it's been one of those ones that have gotten absolutely punished because they report for a loss, and as interest rates go up, it's going to be very sensitive to that. But to me, I think SoFi has just been beaten down so much that it's so bad that now it's good. And I think that that's where we're at with SoFi. Obviously, we'll wait to see what they say on Tuesday when those earnings come out. But to me, I think that the growth story here is actually quite significant. Zach says, calls during a bear market, you must be losing all of your money. Well, it's not been pretty. I mean, It hasn't been pretty. I'm not going to even sugarcoat it. Yeah, my portfolio is not doing great, but I still think that we'll see a turnaround. Fortunately, those calls are mostly leaps, so I got plenty of time. Not really worried about it. Okay, and it's not like my entire portfolio is full of calls. Stop Console Wars says I started buying SoFi back in November at 17, but I managed to get my average down to under 750. That's impressive. Thanks to all the fear people felt about student loans, the beauty is none of the maybe. But the fact of the matter is, even though that might be true, investors are reacting to it because of that. That's the unfortunate part. Just checking in on some of the other ones. Let me know what you guys are watching, and maybe we can review that stock if you want as we get into the end of the show here. I'll be happy to take a look at some of the stocks that you guys are looking at. Man, there's some interesting comments here. Dutch Brothers is overvalued as heck. True. Here's the thing about Dutch Brothers. First of all, the ticker symbol is BROS. So if you're going to dog it, at least do it the right way. But Dutch Brothers is, yes, it's overvalued from a forward PE standpoint. I'm not going to argue that. But the thing of it is, when you look at growth stocks such as Dutch Brothers and the expansion and the speed in which they are growing, there is exceptions to the rule. You look at CrowdStrike, for example, and how fast that CrowdStrike is growing. It's trading at, 170 sometimes next year's earnings. Is it overvalued from a forward PE standpoint? Correct. Yes, it is. But forward PE isn't the end all be all. In this market right now, it's certainly very sensitive to that. No question about it. But Dutch Brothers, when you see high valuations like this, it's because the company is growing ridiculously. And their expansion plan is very, very high. I mean, you could have made the same argument. If we're just going off of PE, you could make the same argument with Tesla back in the day when it was trading at 300 times next year's earnings. I mean, that's what we were looking at. Even pre-pandemic, Tesla was trading at those levels. I'm not saying that this is apples to apples comparison, but when we're just looking at PE, you can't always go by that, especially when a stock is in absolute growth mode, which in my opinion, Dutch Brothers is in. Might not work out in this type of environment, but that's just how I feel about it. Watching Tyson. Yeah, Tyson has earnings. I believe this, or did they just had earnings. There's another food company that's reporting. Oh, no, it's Tyson's tomorrow. So Tyson reports tomorrow. That'll be tomorrow pre-market. So before the market opens, we'll see Tyson Foods report their earnings. Oh, TSN. What did I put TSO? Here we go. TSN is going to be reporting their earnings tomorrow. And the food industry has been interesting because I don't know if this is why you're watching Tyson, but I think that why I would be watching Tyson to see how the food industry is actually holding up when it comes to inflation. Are they able to continue to pass on the increases in costs onto the consumer? Tyson has the estimated earnings per share of $1.88 tomorrow with $12.84 billion in revenue expected. I think they come in much higher as far as revenue is concerned. The real worry for me is going to be that bottom line is the $1.88 per share. Can they beat that share or the earnings expectation there? I think it's possible, especially because we've been seeing a very strong consumer, and I think that they could potentially do well. So I think this is a good one to watch for sure. You have the 50-day moving average, which is right around where it closed. That 50-day moving is at around $91, close at 90.82. So I think that's certainly an important one to watch. I like that one. Appreciate you, Melanie. Hitting the like button. Appreciate that. Let's check out a couple other ones. ARK, ARKK. Yeah, ARK is down. Here's an interesting statistic. ARK is now at levels where it was, ARKK, now at levels where it was before the pandemic began. And it's actually lower than that. So we're looking at February 20th of 2020. ARKK was at $61 a share, $60.98. That is absolutely wild. It's now trading down well below that, and we're getting down closer to pandemic lows. You know what's up since the pandemic? Berkshire Hathaway. BRKB shares is up 37% since the pandemic, or from the pandemic highs, I should say, and continuing to absolutely rip face. Is value outperforming innovation? Sure seems like it right now. It's crazy. ARK's given back all of its gains since the beginning of the pandemic, or since just before it started. That's crazy to me. I mean, that's absolutely wild. I think that ARKK is certainly one worth watching for. The only problem I have here is, and there's a lot of things that I can get behind on with when it comes to what things that Kathy Wood says, especially when it comes to deflationary factors that could bring inflation down significantly, especially when it comes to software and cloud, and innovation in general is deflationary. 100% on board with that. But the fact of the matter is that she buys a lot of stuff that makes me just scratch my head at the time that she buys it. She talked about Rivian being overvalued when it had its IPO, obviously, right? I mean, given how much that's come down. So she wasn't wrong on that. But when she buys things like Roku that were at $400 a share, or she buys, Zoom, when it was trading at 100 times sales, that kind of stuff just makes me scratch my head. I'm just kind of like, why would you buy it all the way up here? Now, granted, I've had the same questions about Warren Buffett as well. Occidental Petroleum is up 500% from where he sold it back in August of 2020. So he doesn't get a free pass here either. But I mean, his portfolio has certainly been outperforming hers since the start of the pandemic. Unfortunately, is it a buy here? I think that there's probably some more pain for ARK. Unfortunately, I could see it coming down to maybe around $40, 39, 46, $33 per share could be one as well. I mean, if you guys saw that she doubled down on Teladoc after the not only did she buy shares of Teladoc before earnings after it tanked 35-40%, then she went and doubled down on it and bought even more after their earnings. She could potentially look like a genius in 5 years, or she'll have nothing but egg on her face if the ETF continues to perform the way that it is. Could we see a turnaround? I think potentially. What would turn this around is if we saw those inflation numbers come down. I think that ARK could make a sharp turnaround. So I'm not saying that go out and just buy it today, but I would say that don't be surprised if we see ARKK have a very sharp turnaround if we certainly see earnings or inflation come down, a significant amount. And I like what Saucy Fredo says, ARK looking good pre-COVID. Yeah. I mean, I think pre-COVID levels, considering how low this was, that now that we're sitting well below it. I mean, pre-COVID was at 60. It's sitting at $45. We're going to sit here and say that ARK's overvalued now? I don't think so. Certainly good risk reward there, in my opinion. Yeah, absolutely, Ryan. Ryan Rose says Kathy has a 5-year price target. Most people have 1 month price targets, so I get it. 100%. I definitely agree with that as well. It just seems as if her claim to fame has been Tesla, and it's a real big head scratcher with all the other holdings. And the strategy of buying is what makes me kind of like not understand the strategy of her buying and selling. Just like she sold Palantir damn near the bottom. I don't know. I just that kind of stuff just makes me scratch my head. Obviously, she's got a team of ridiculously smart people on her board and in her with her management team, but man, that's something that like just doesn't really compute with me. Like the strategy in which they've been buying, just I don't understand at all. I like Adobe, Salesforce this week if they leak more. Multigoya says, yeah. So I like Salesforce a lot as well. This is a company that had a high multiple. I don't think it does anymore. Forward P is at 36 times. That's right in line with some of the other big tech companies. And you look at, to be fair, this did get ahead of itself. It is a little overvalued when you compare it to the S&P 500 that's trading around 18 times next year's earnings altogether. But nevertheless, Salesforce is a growth company and they're continuing to do extremely well. When they have their earnings come out, I think they're going to do really well there too. Their outlook should be good. I expect good guidance from them. I don't expect a slowdown from Salesforce at all. So I really like this company. The problem is that the chart has just been absolutely destroyed. And yet again, Salesforce is another one that's below pre-pandemic highs. So Salesforce was trading at 196 times or $196 a share, and it's now trading at 169. So it's given back virtually all of its gains from 2019, from February 2000. I'm sorry, 2020, February 2020, before the crash happened in 2020. It was trading at that level, and now has given all of those gains back, all of them. And Salesforce has grown significantly. They've made acquisitions. They own Slack. I mean, the company has done amazing things. Is the multiple a little high? Yeah, but that's a premium that you have to pay when you're looking at a company that grows like Salesforce grows. So I think that this is interesting, and I think that this is a solid buy. I think Salesforce is way undervalued, just from an overall perspective, not just going off of their multiple. I think this is a great buy. I love Salesforce down here. The chart has been absolutely destroyed. It still hasn't found a bottom. So I would say, wait till we actually see this change direction, because nobody wants to catch a falling knife. But I love Salesforce, man. I love it here. Okay. Saucy Fred also says, hard to be bearish right now. Too many bears, and we could get a rip your face rally any day now. That's kind of what we talked about at the top of the show, Saucy. So I'd appreciate you checking that out. But I did bring in some pretty good tidbits information as why I feel like we could see a really nice bounce or a nice rally. Some interesting facts and statistics that I brought to the table at the beginning of the show. So make sure you go check that out. We'll love to get your guys' thoughts on it if you didn't catch it. We didn't talk about Palantir. Palantir does have earnings this week too, don't they? When do they have earnings? Is it tomorrow? It's sometime this week, I believe. I don't have. Oh no, it is tomorrow. It's tomorrow pre-market. I just missed it. Palantir has earnings as well. This is actually one that I own too. I don't have a ton of it. Only makes up about 3% of my portfolio or what have you. I do have calls on Palantir. A little bit higher than I would have liked them to be. They're at 13 strike price. The expiration isn't until far out either. It's not until the end of the year. So I do have some time to wiggle with this one, to wait for this one. 50-day moving average is at $12. This is also one from a multiple perspective. It's pretty high still. Even with this trading at $9.48, forward multiple on this forward PE is at 47.48 times next year's earnings. It's still overvalued. That's crazy. It's extremely overvalued from a PE standpoint. However, they could come in with some really remarkable earnings. They continue to knock out contracts with the government. Obviously, that's the bread and butter of their business. We know that they're also growing in the commercial side of things as well. And so that's what a lot of investors are going to be looking at. What are their earnings expectations? Let me look this up real quick. Give me two shakes. Give me 2 shakes on this. And hit that like button while you're waiting. Estimated earnings per share tomorrow morning at 4 cents and $443 million in revenue. So I think that that's a pretty solid bar for them. And I would be surprised if they don't come above that. The thing here is going to be the guidance on Palantir. Is the government continuing to spend? Are we seeing more commercial CapEx spending for things like for services such as what Palantir provides? I think so, especially in an environment where we're looking at things going on between Russia, Ukraine, and cybersecurity being a big deal. Palantir, in my opinion, I think has tons of value here, despite the multiple. Do I think it goes higher? I think it's anybody's guess. We'll just have to wait and see what those earnings come out like tomorrow. All right. What about Under Armour? Under Armour actually came in and missed earnings. They didn't do well. They came in and actually reported some pretty poor guidance. The stock dropped 25%. It's an overreaction, in my opinion. While Under Armour didn't come out with great earnings, the fact of the matter is that now this is trading at $9.85 when it was trading at $23. This falls right in line with like Nike and Lululemon. People aren't going to stop buying Under Armour. And I think that the reaction here was an overreaction. Oversold is an understatement for Under Armour. I like it here, even if you try to catch a falling knife. And I don't say that very often. If you're just looking to take on some risk, I'm not saying that you should just go all in on this thing. So I want to preface that. And again, I'm not a financial advisor by any stretch of the imagination. I'm just a regular dude. But to me, it just makes sense. We look at this. We're seeing kind of like this bottom support all the way down at 839 with this trading at 985. To me, this is just a ridiculous overreaction. Maybe we see it retest this 8.25 level and on support, but Under Armour, in my opinion, is an absolute buy. You look at Nike, how much that's coming down, and that's also made a ridiculous move down. And then you look at Lulu, also, and Lululemon had incredible earnings. Does not deserve to be down here. So retail, in my opinion, also really undervalued. We switched from buying goods to buying services. Interesting. Yes, I think that there's something to be said for that. But I don't think that we just completely the thing is that we're seeing a shift between e-commerce to people going back in the stores and buying things. And so I don't know. I think that when I look at Lululemon down here in the city, stores got a lot of traffic going in and out. When the Under Armour store as well, I think people are just they want to try on stuff rather than just ordering it online and sending it back if they don't like it. Okay. All right. Guys, that's going to do it for tonight. Thanks so much for tuning in. I appreciate you guys. I'll be back here tomorrow at 3:45 p.m. Eastern time to cover those earnings that are going to be reporting after hours tomorrow afternoon at 3:45 p.m. Eastern time. So make sure you're hitting that like button, hit the subscribe, hit that notification bell, because I'll be reacting to Upstart, AMC, Suncor, Plug Power, Novavax, Clover, Tattooed Turd, aka Tattooed Chef, Blink, and Lemonade. Those are all ones that I'll be reacting to after hours. And if you want to get my reaction to those, you're going to want to make sure that you hit that notification bell to get notified when I go live again at 3:45 p.m. Eastern time tomorrow. Guys, thanks so much for tuning in. One last request, either hit that join button next to subscribe or hit the link in the chat here and go join the Chaos Crew for $4.99 a month. You can't beat it. I put out 5 stocks before the market opens that I think are worth taking a look at. I'll give you a fundamental and technical breakdown on those, and no risk to you really, other than what basically a gallon of gas costs each and every month. And it just helps support the channel and everything you see behind me. So if you guys want to support me as well as get something of value from yours truly, I certainly would appreciate it if you become part of the Chaos Crew, again, by hitting the join button next to subscribe, or you can go to onthechaos.com by hitting the link up in the chat as well. Thanks so much for tuning in. As always, I'll see you tomorrow. Bye.